Well, here's the key thing. When I heard that George Soros earned $1 billion in the Forex market, it just blew my mind open. It saw that that's the possibilities of the Forex market. So what for me, it happened, I just sought out some of the best mentors in the world. I knew that education was the most important thing. So I just went after the mentors, clipped at their heels, and really we got it right after a couple of months.
What are the top 3 points, maybe the most difficult things that you had to learn?
Well, I think the most important thing I had to learn was to rewire my whole brain, because some of the things that my mentors taught me is that much of successful trading is counterintuitive. Meaning to say, which is a very quick example, when we feel that the prices are so high, we think it's time to sell. When we see that prices are so low, we think it's time to buy. That's not the case with the Forex market. Our job is to really follow the trend. That was the biggest learning lesson for me.
Because foreign exchange doesn't really have gravity, does it? Not like stocks, where they go up or down. It's one currency in the pair goes up and the other one comes down at the same time. So in terms of rewiring your brain, what did that mean in practice?
Well, it came with this one sentence: the trend is your friend until it bends. So when the trend is really down, our job is to get on the trend and just short it all the way down. If the trend is up, our job is to buy. It's as simple as that.
Timing the market is always an issue. How do you really do that?
Well, the key thing, most important thing that I have found through my experience is to really have an alignment of the fundamental analysis and the technical analysis. So when certain news are pointing to us in a certain aspect, and when on the charts we see certain patterns, when it all comes together, that's the time to pull the trigger.
Still, foreign exchange does require a lot of time and attention. It's not like you can buy it, put it in the bottom drawer, 6 months later look at it again, is it?
That's true. I would agree that when someone trades a foreign exchange, because there's that rush of being a short-term trader, as opposed to a value investor who has like 5 to 7 years waiting time, I prefer that little bit of thrill. But at the same time, it is absolutely essential that we have the correct strategies, that we understand to have proper money management and the proper trader psychology.
I've also seen various foreign exchange software around, meaning that you kind of switch it on in the morning, and then you go off to work and you go about your day. And by the time you come home in the evening, it's done all the trades for you. It's got in and out at the right times, and again, you just have to turn the server on. Is that not another way of doing it?
And I'm so glad you asked me that question. I'm a manual trader. Here's my answer that I always mention this. You see, if those robot systems truly work, would they honestly be selling it for $97 online? Look, if I'm the developer of that software who finds that, hey, you just turn it on in the morning and at night it comes back, it makes some money for you, voila. If that is really the case, I wouldn't be selling it to you for $97. I'll be walking to Deutsche Bank, the largest currency trader in the world, and selling it to them for $1 billion. At the same point, I just want to mention, when I had a chat with some of my mentors and I asked them, do all these automated robots truly work? And they said 2 things. Number 1, they don't work because automated robots don't tell you when a trend moves into a range, because there's a certain level of subjectivity there. Number 2, automatic robots cannot tell you when Ben Bernanke opens his mouth or when Timothy Geithner opens his mouth. You must have a certain level of subjectivity to manage the markets.
Finally, which is going to go under first, the euro or the US dollar?
Well, at this particular point, I feel that the whole wave of wealth that's sweeping through Europe, there's so much negative market sentiment about the euro. So at this particular point, is that the euro is doing worse than the US dollar, because the US dollar has the added advantage of being a safe haven currency. So when there's fear and panic in the markets, everyone flies into the US dollar, strengthening it. At the same time, most of the world, fund managers, investors are shorting euro. So my call is that for euro to go down still in the next 3 to 6 months, because there's still too much skeletons in the closets that need to be combed out.
Going down, but not going under?
I don't think
because there has been talk, right? If Greece goes completely under, then it'll take the euro with it.
Well, that's one perspective. I don't see the ECB having well, they won't let the whole euro go under at this particular point. So while negative sentiment still having so much on the euro, I don't see the ECB will allow it to go under. So at this point, there's more negative sentiment on the euro as opposed to the US dollar. Having said that, to complete the whole picture, because the world is basically in a broad 3 regions. There's the US, there's Euro and Asia. Asia would still be the best position in terms of driving global growth.